Good morning. It is Thursday, January 29, 2026. From the halls of the European Commission to the high-tech semiconductor fabs of East Asia, the last 24 hours have seen a monumental realignment of global power and capital. I'm your host and this is your Global News Briefing. World News and Geopolitics. We begin with a historic diplomatic breakthrough that is being hailed as the mother of all trade deals. Late yesterday, the European Union and India officially concluded negotiations for a massive free trade agreement, FTA. President Ursula von der Leyen declared the deal a signal to the world that rules-based cooperation still delivers. The agreement creates a free trade zone of 2 billion people and is expected to save European exporters over €4 billion annually in duties while slashing Indian tariffs on European cars from 110% to just 10%. However, the geopolitical landscape remains fractured elsewhere. In the United States, President Trump has slightly softened his rhetoric toward South Korea, hinting at a negotiated solution, following his surprise 25% tariff warning earlier this week. In the Middle East, the region remains on a knife edge. Iran has issued fresh warnings to Washington as U.S. naval assets continue their deployment to the Gulf. Meanwhile, in Gaza, Israeli authorities have announced plans for a massive new camp for displaced Palestinians in the south, a move that has already drawn sharp international criticism over humanitarian concerns.
Global economy and finance. Turning to the financial markets, the US dollar is experiencing a significant sell America rout. The greenback hit a 4-year low yesterday after President Trump publicly commented that the dollar's value remains great, which traders interpreted as a sign that the administration will not intervene to support the currency. In the commodities space, gold continues its meteoric rise, leaping to a new all-time high above $5,300 per ounce. This rally is driven by what analysts call the debasement trade, as investors flee fiat currencies for hard assets amid rising U.S. debt and trade volatility. Meanwhile, the IMF released its latest World Economic Outlook, projecting global growth to hold steady at 3.3% for 2026. However, the report carries a stern warning: the AI hype cycle is under scrutiny. The IMF warns that any reevaluation of AI productivity could trigger an abrupt financial market correction that could erode global household wealth.
Technology. In technology, the semiconductor industry is buzzing after ASML and Texas Instruments posted record-breaking quarterly results. ASML, the backbone of chip manufacturing, reported a surge in orders, signaling that the global AI infrastructure build-out shows no signs of slowing down. Adding to the sector's momentum, the Chinese government has reportedly granted several domestic firms permission to purchase NVIDIA's H200 AI chips, a move that sent NVIDIA shares climbing by 2% in early trading. However, a new report from EY suggests a shift in fiscal priorities. The report urges governments to hike capital expenditure specifically in advanced tech sectors, such as Gen AI, space, and robotics, to ensure they don't fall behind in the global innovation race. This comes as OpenAI is reportedly scouting for new US-based suppliers to further domesticate its own AI supply chain.
Logistics and supply chain. Finally, in logistics, the industry is facing a massive restructuring. UPS has announced it will slash an additional 30,000 operational roles and shut down 24 facilities this year. The delivery giant is pivoting away from low-margin Amazon volumes to focus on higher-margin medical and industrial shipments. In the maritime sector, the EU Emissions Trading System, ETS, has officially moved to cover 100% of verified emissions for shipping lines starting this year. This is already driving up surcharges for global cargo. Supply chain managers are also bracing for a copper squeeze. JP Morgan Research predicts a refined copper deficit of 330,000 metric tons for 2026, as demand from AI data centers and EV production outstrips global mining capacity, potentially pushing prices above $12,000 per ton. That concludes your global briefing for January 29th. We will continue to monitor these stories as they develop. Stay informed, stay ahead.